You're looking at a daily chart of the Nasdaq from 2009. This is September 2009. I just wanted to point out a couple of things for this little exercise here. History doesn't repeat, but it often rhymes. And, you know, this was a great financial crisis. The Nasdaq came down, hit a low of 1295, then retested this low, you know, a couple months later before, you know, made, I guess you'd call that a double bottom, then started to trade back towards the 200 simple moving average, ran into some resistance here at this level, and then finally broke above, you know, broke out of that, away from the 200 in June of 2009. Okay, so keep that in mind. You know, etch that picture into your brain here, the double bottom, little resistance at the 200 before it got back into this power trend here in 2009. Now, there was stocks back then like Green Mountain Coffee that broke out prior to the Nasdaq, the index. And this is Netflix. You can see here, you know, it's back in December of 08. This is already above its 200. This one, you know, doubled here from November to April, and then formed a base. So this is already out of the box, forming a base before the index had ever even gotten above its 200. And so I'm going to go back to the Nasdaq, and you could see it was, you know, 6 months later, you know, Netflix was way ahead of the index. And anyway, this is kind of similar. Like I said, the history does not repeat, but it often rhymes. I'm stealing from Samuel Clemens, the great Mark Twain. And I'm going to go to today's date, if I can type here. And anyway, we have the Nasdaq here making a bottom after, well, I'll go to the weekly here. It's a weekly review. Thank you for watching. But the Nasdaq had from peak in November of 2021 to trough in October of 2022 is 11 months, and it's 37%, you know, correction here. And you can see it's a retest of the bottom there. It hit a bottom in October. I'll go to the daily. You can see the bottom here, and then the retest here in the end of December. Then in January, the month turned, the year turned, the calendar turned, I should say, and it was like flipping a switch. And is all of a sudden, this thing wanted to charge right up to the 200. And again, it had a little bit of a problem here at the 200, you know, just little box area here. And finally broke away from it, I would say, you know, for good. Knock on wood, you know, right around the middle of March. And it's gotten into this power trend now where it's in a real strong trend, uptrend, you know, making higher highs and higher lows. It got above the high of, you know, back in August of 13,181 yesterday and closed above it at 13,240. And so higher lows, you can see the higher lows and the higher highs. That's a definition of an uptrend. So the Nasdaq is in an uptrend, and it's time for me to be way more aggressive. We've been on the green light since it went above the old high of 227 there, or no, excuse me, 269. But anyway, that's neither here nor there. And I like to buy leaders, and NVIDIA is certainly a leader. And people say, well, it's overvalued, and I don't care. You could see this one broke above its 200 way back in January and has just been ramping higher in a power trend. Yeah, it exploded, and people make fun of the AI, saying AI in their conference calls 1,000 times. But if big corporations are putting big money into artificial intelligence, it's not a bubble. There's going to be real revenue growth and earnings growth, and you might think NVIDIA is ahead of itself, but maybe not. I just go by price, and this one is a leader. SMCI is another one of the leading stocks at MC stock charts, and this one was obviously ahead of the Nasdaq. We had this at a buy point here at the 95 area. It came down, undercut its 50, and then ramped higher, and got into a little short stroke pattern here a couple weeks ago. You can see on the weekly. Let me zoom in here. On this week, it was up 30%. That was May 12th, and the next week got back less than 2%. And the last 3 weeks just been rampaging higher. Those are the stocks that I want to get into, and I'll get into that later. But I'm gonna I'm gonna mix in COCO as one of the leaders with NVIDIA and SMCI. How can you do that? Well, geez, I mean, look at it. It broke out. It's doubled since February. I mean, I like stocks that go higher. It's in a power trend, making higher highs and higher lows. It pulled back to the 50 and found support a couple of times here. So what's not to like about that? Trend traders like me like that kind of action. Another one is HubSpot, a software name. This is broke out of a base here and just this is earnings. I believe this is an earnings gap. I'm a sucker for gaps too. Gap higher, pull back to its 10 one time. It just keeps ramping higher. So those are the stocks that I like. TGTX, this is the multiple sclerosis drug. This one got approval, ramped higher, and then this is the launch of the drug, I believe. And then the sales, was higher, better than expected of their drug. It ramped higher, and then now it's pulled back. If you look at the weekly, it's just pulled back to its 30 simple moving average here. 4 weeks of pullback, and to me, stocks that make these violent moves like that, they continue to do it. You can see that's the pattern here with TGTX. I wouldn't be surprised to see this thing ramp 1 or 2 more times. A lot of heavy short interest in this one. I'm going to go to another different style here because there are a lot of stocks are pulling back and people are getting shaken out. You don't want just garden variety pullback moves. We had Builder's First Source here back at 85 or whatever. It ramped higher and then pulled back to its 21 and found support. So for me, I mean, if I don't own this and I see that support, I'm going to want to, me personally, I want to, if I want that stock, that's where I want to buy it. I'd rather buy it here than at, highs at 122. I'd rather buy it, down here at 112, save yourself $10. CrowdStrike is another one, pull back to its 50. This is earnings here. This is Thursday, pulled back after earnings, strong earnings. But all it did was come back to its original buy point. We had this one at 140 here, and then ramped up, more than 10%, and then pulled back to what I would say its original buy point here, which is the 50. So that was a nice action there last week. Duolingo, another one. This one undercut its 50 4 or 5 weeks ago, and then recently has just been finding support there at the 21. So leading stocks, they're not going to set up on a base for you. Then maybe you just have to get them on pullbacks. ELF is another one. Big prior uptrend, pullback to a moving average, and then ramps higher. And you can see since that was an earnings move 2 weeks ago, whatever, and then it's making higher lows. You can see the low there, 123, a low of 101.37, a low on Friday of 102.90. So higher lows, higher highs. I could imagine it's going to continue to trend higher. Couple other ones. CELH is a soft drink like COCO, kind of. Just pull back to the 21 here and found support and ramped higher. Uber is another one that formed a base, but broke out hard here. I think that's earnings, pulled back to the 21, and then has ramped higher the last 3 sessions. Different style. I mean, it's good to have one style that you master, but it's also good to have tools in the toolbox. Because in a year of a stock market, my mentor would always tell me there's 3 trends. There's an uptrend, a downtrend, and a sideways trend. The market will go up for 6 months in a year. It'll go down for 2 months in a year. It'll trade sideways for 4 months. And you have to be able to navigate those 3 different types of markets. MBLY here, I think this was an earnings report where it just sold off. I mean, I think anybody who wanted out of this stock got out. And then it undercut the 50 and then has rallied back above. It's still forming a base. And this is a relatively new stock, an IPO. Arista Networks, this is another one that, undercut its 50. It floundered around down here for a few weeks and now has just ramped hard and still, in a base. And to me, looks pretty good. ACLS is another one that undercut its 50 here, just forming a base, undercut its 50, then rallied hard through it. And if you didn't get it back on this buyback, pullback here to the 10, I mean, it's pretty extended now. And that one moves pretty fast. And that's another, I can tell that story another day about why stocks move so quickly. But anyway, this is Palo Alto Networks, another one that, undercut its 50, rallied through it. You got to look at the weekly on this one. This is a beautiful chart here. You can see the consolidation pattern in the weekly chart of Palo Alto Networks. It is a weekly review. And you can see the consolidation of more than a year here, just forming this little consolidation, little base, and now starting to poke its head above. And the bigger the base, the higher in space. So I like Palo Alto Networks. Now, I mentioned different styles. And I know people don't like the bottom fish or whatever, but this is Monday, and you can see there was sold off, corrected, whatever you want to call it, with the index from November to October of 2022, and has formed a stage 1 base. And you can see the last 4 or 5 weeks is just ramped hard, but still just coming out of a base here of its stage 1 base. So I still like Monday, and could see it on our ready list here pretty soon. DigitalOcean. Oh, I got to point out, Monday, it's got earnings and sales, and it's not just going up because of the chart, but this is another one that IPO'd, ramped hard, corrected with the Nasdaq, and now has formed a stage 1 base and consolidated. And this one does have the earnings growth, the sales growth. I mean, if you look at the forward, if you can believe these, 82% earnings growth this year, and 33% in 2024. That's not bad, with above 30% sales growth. So it's not just going to go up because of the chart says so. This one has real earnings and real sales, but you can see this base here, and it's just ramping higher. To me, if you look at the weekly, I think this still has room, even though it's made a nice move the last 3 weeks. You can see the volume coming in on DigitalOcean. HashiCorp is another one. They report this week. They, if you look at the weekly, they IPO'd right at the wrong time. December of 21, when the Nasdaq was starting to correct, and this one was $100, I believe, or over $100 right after the IPO. 102, sold off, corrected. Now it's formed this stage 1 base. Looks pretty good. One thing I need to point out about HashiCorp is they report earnings this week. They do have 50%, 40% sales growth. They need to be profitable here. So we need to hear from the management this week, but I kind of like this action here in HashiCorp. And the last one I'm going to cover here today. No, I'm lying. I've got more to go. Datadog is one that sold off or corrected with the Nasdaq, formed this stage 1 base. Now I like getting in early, as it broke. We had this on our ready list as it broke this downtrend line here, and it's been up, 6 weeks in a row. But if you're going by standard buy points, it still has to get up to this 120 level here to make a proper cup, with handle pattern. So definitely one to watch. But I did fib in saying that was my last one, because I want to point out Tesla. I like investing with the smartest people in the room. If you had a chance to invest with Steve Jobs in 2005, I think you would do that. I'm not saying Elon Musk is Steve Jobs, but he's nobody's fool. And regardless of what you think about him, this stock is set up in a consolidation pattern here. And it's you can see this base on base pattern. What I like about it now, it's cleared it's 200 simple moving average. That's a plus for me. And it's coming with heavy volume. So standard would be 207.79. It's above that now. And to me, Tesla looks good. And I did mention Steve Jobs and Apple, my favorite CEO of all time. And it's this one. They're announcing a new product this week. The old high was a 3 trillion at 182, 3 trillion market cap. And, inflation, 3 trillion is the new trillion. So I would not be surprised to see Apple make a move here. And you say, well, what can you expect here? It's at 180. What can you expect? A 10% move would take it to 200. Yeah, I could see that possibly with Apple. Anyway, I look forward to the week. And that was a lot of content there. And I just want to say thanks for watching, and make your own decisions, do your own due diligence, and never give up.